Good morning. Good morning. Welcome to Your Pretty Pennies with Tara Jones. I'm Tara Jones, your financial success coach. And today we are continuing our series, the Financial Spring Cleaning series. And we are on day 2. And it's going to be all about cleaning up your credit report. So one thing I want to dig into today is talking about credit. As you know, in the past, I've talked about the advantage of having a high credit score, what to do if you don't want to operate with a credit score, all that information, how to increase your credit score, rebuild your credit score, how to break down your credit score. All of that is available on my website, on the podcast, on my YouTube channel. You can definitely find more of that content. But today we're going to be talking about how to just check in with your credit report and clean it up to make sure that you're continuing to build your credit score higher and higher so you can take advantage of a high credit score. And for those of you who do not know, some advantages of a high credit score is a low interest rate mortgage loan, business loan, the fact that you can actually get a business loan, but then also get a higher amount, get a lower interest rate, business line of credit if you're opening up a business. Insurance rates are lower. So our car insurance, our life insurance, some other insurances that we have, policies that we have on ourselves can be lower if we have a higher credit score, because to individuals in the insurance world, it looks like we are more responsible and stable financially and otherwise if we have a high credit score, right? And typically that's true. If you have a high credit score, or if you know how to manage money well, if you have a great portfolio financially, typically you're doing good in other areas. Those who are suffering mentally, physically, emotionally tend to suffer financially. Those who are winning in the financial world tend to be winning in their business, in their family life, in their social life, in their health and wellness, things like that. All right. And also employment eligibility. Oftentimes nowadays, employers look at your job, look at your credit report and your credit score to decide whether or not they're going to give you a job. So obviously that says something about you, about your credit history, about your stability, about your ability to be trusted, right? Because having lines of credit extended to you is basically a trust thing, right? Your credit score is basically saying, how trustworthy are you with this money that I'm loaning you, right? And so one thing we want to do this week, again, take some time this week. This is a 3-day financial spring cleaning series. So you're going to have the weekend to get all these things checked off your financial spring cleaning checklist, right? I want you to pull your credit report and I want you to look for a certain amount of things, all right? And we're going to clean those up if you see them. Again, if you want to know how to rebuild your credit, how to maintain a high credit score, what all goes into a credit report, credit score. Again, go to yourprettypennies.com, put in the search box credit, and you can get so much information. I've talked over the years tons and tons of times about credit and credit rebuilding, credit repairing, maintaining a high credit score, things like that. I have right now a 748, was just at a 727 a few months ago. Now I'm at a 748. Many of you know my financial goal right now is to save for a down payment on a new home. So I'm really trying to keep a great credit score so that way I can get a low interest mortgage rate, or me and my husband, if I'm married by that time, get a low interest rate mortgage loan. So yeah, I'm pretty excited about that. So you're going to pull your credit report. That's going to be your task for this spring cleaning day, financial spring cleaning day, is to pull your credit report. And I want you to look for the following. Number one, I want you to look for duplicates. So when you see your name or your job or your addresses, if you see a bunch of different names under, so for example, my name is Tara Jones. So if I see Tara L. Jones, Tara Lene Jones, Tara J, like all at the top of my credit report, I'm going to dispute all of those, most of them, and get those wiped off and just have one name on my credit report. All right. So you could just I'll just probably keep my first name, middle name, and last name, and everything else drops off. And the reason why we're doing this, not only this may not affect your credit score, but affects your credit report. Because again, there's other people that are looking at your credit report, not necessarily your credit score, to see what your financial life is like, see your credit worthiness. And if it looks like you're all over the place, it doesn't look good, right? If it looks like you have lived at a bunch of different places, you have a bunch of different aliases for names, you go by a bunch of different names, it just doesn't look good. It doesn't look consistent. It just gives red flags to the naked eye, to the natural eye. And again, employers, insurance companies, mortgage companies, things like that are looking at these credit reports and not just your score, right? So your score can be 748, but your credit report can look, a little bit all over the place, right? So this is why we're cleaning up our credit report. And again, if you clean up your credit report, chances are 9 times out of 10, your credit score is going to go up. So it's like a win-win, right? All right. So if you see duplicates in your addresses, so if you lived at several different places over the last 10 years and you see them all listed, dispute all of those and only keep the one that you're currently residing at. Only keep the address you're residing at, all right? And you're going to do this across all 3 credit bureaus, all right? The major ones. So Experian, TransUnion, and Equifax. You're going to pull a credit report for all 3. You're going to scrub all 3. So you're going to look at them for duplicate names, for duplicate addresses. Some credit reporting bureaus, they might want you to keep your current one and then the one that you just had, especially if you moved within the last couple of months or years. They might want you to keep the last one you had. But if you are getting back into 3, 4, 5, 6, 7, 8 years ago, you lived at a certain address, get rid of those. All right. And then the next thing I want you to look at is things in collections. So under your credit score, under your credit report, you'll have different sections, all right? And so one section is going to say collections. Collections. I want you to see if there's any businesses, business names, collection agencies that are listed under there. If it is, I want you to go to YouTube, and I want you to go to this YouTube channel called Brandon Weaver, Brandon Weaver, BrandonWeaver. And I want you to binge watch a little bit of his videos, and I want you to dispute those, all right, to get them off your credit report. Even if you're paying for, paying back the amount in collections. I have my own views on that. I'll be coming out with a series soon about that, about disputing credit things and collections and all that good stuff. But I want you to go to Brandon Weaver on YouTube, and I want you to watch his videos, and I want you to start disputing some of those things that are on your credit report. Those collections hurt more than anything. Well, bankruptcies and tax liens and all that hurts more than anything. But for the average person, the debt and collections, that is really what's holding you back from a high credit score, right? And holding you back from taking advantage of interest rates and business loans and business capital and things like that. So definitely looking at collections area. If you have anything in there that is reporting on your report, definitely go to Brandon Weaver on YouTube, find out how to dispute collections and charge-offs, and definitely clean that up, all right? High balances on your revolving lines of credit. So revolving lines of credit, aka credit cards, or lines of credit where you owe as much as you spend, right? So it's not an installment account. There's 2 different types of debt. So there's like loans where every month you pay a certain amount. That's an installment account. And then there's, thank you so much for dropping Brandon Weaver in the comments. And then there's revolving accounts where you just owe as much as you spend. So that's like a credit card, that's a business line of credit, that's a personal line of credit, things like that. With those, you do not want to carry a high balance, because this goes right hand in hand with your credit utilization. When you get lines of credit, this is for business purposes. The point of credit is not to live off of. And so when credit agencies, when employers, when insurance companies look at your credit report and they see that you live on credit, aka you have high lines, you have high amounts on like your credit cards, that looks like you're living on your credit cards. You're dependent on it. And it's really just supposed to be to leverage, right? And it looks like, dang, she puts a lot on her credit card every month. I don't know if I want to give her this amount of insurance, or I don't know if I want to give her this mortgage loan because she can barely handle the expenses that she has now. And let's be clear, insurance companies, mortgage companies, all these other places, businesses, employers, they want to make sure and they want to work and do business with people who are financially stable, people who are stable in their households, right? And so when you are all over the place, when you are having high credit lines of credit, having high amounts on your lines of credit, it just looks like you're all over the place. You do not have a handle on your finances. And that is when you get in trouble. That is when you start to say, okay, we'll give you this auto loan, we'll give you this business loan, we'll give you this mortgage loan, but we're going to charge you extra because you look like you might be a risk to us, right? And that's what we don't want. All right. And so the next thing I want you to look at is late payments. Go to the late payment section. If you see that in the last few years that there was a company that reported a late payment for you, I want you to write a Goodwill letter. And again, you can Google that, how to write a Goodwill letter, Goodwill letter, basically to the company and saying, hey, a couple months ago, a couple years ago, I was struggling with my finances. I fell behind, and now you've reported a late payment on my behalf. Can you please take this off? Like, I'm cleaning up my credit score, cleaning up my credit report. I'm doing much better. I've been consistent for the last 6 months, as you can see, as a consumer of yours or as a client of yours, as a customer of yours. Can you please remove this off my credit report? 9 times out of 10, they will say yes, and you can get that removed, and therefore it can stop looking negative on your credit report and stop contributing negatively on your credit score. All right. So far we talked about high balances, late payments, charge-offs, bankruptcies, judgments, and liens. Obviously, you have to take care of those, but you can also write Goodwill letters. This is not 100% going to work. I can't say it won't work. I've had clients where they've written Goodwill letters to the court and they've removed evictions, because evictions show up on your credit score, your credit report. Tax liens, if you have a public judgment, I've seen people get those removed, writing Goodwill letters to either the court or the person that you was going against in court. So look at those sections: judgments, bankruptcies, liens, public records. It should say like public records. And if you have anything under there, again, look up a Goodwill letter based on, again, repossession, based on a bankruptcy, based on a judgment, based on a lien, and see if you can write these companies Goodwill letters that have worked for other people in the past. Again, quick Google search, you can find the template on what to write and how to write it and how to state it. Obviously, you just put your name, your dates, your information, and then the business or the court's information in there, and just write and say, hey, I was struggling back then. I'm doing better now. I'm on a better track record. How can I clean this up? Can you help me clean this up by taking this off my credit report? Obviously, I'm still going to handle whatever it is that I need to handle, but can this just stop reporting to my credit report? Again, it's not 100% guarantee that it'll work, but I can't say that it won't, because I've seen people who it worked for and I've seen people who it hasn't worked for. So it's absolutely worth a try. Absolutely worth a try. All right. And then the last thing is inquiries. So that's going to be another section on your credit report. And there's 2 different types of inquiries. There's soft inquiries and there's hard inquiries. Let me see if I wrote the difference between the 2, because sometimes I like write myself notes. Well, I could probably come up with some off my head. So hard inquiries are inquiries from companies who you're trying to get credit from. And so that could look like, let's say if you apply for auto loan, apply for a mortgage, if you apply for apartment, some apartments run your credit and that's a hard inquiry. If you try to open up a credit card, things like that. That reports to your credit score. Your credit report. And it is a slippery slope with this. Again, credit bureaus, credit agency, or not credit agencies, what am I trying to say? Businesses, they want to do business and extend lines of credit to those people who want to leverage credit, not depend on it. Because 9 times out of 10, if you depend on credit, you are the ones that are at risk of giving them risk of not getting their money back. And even though they're loaning you money and they put interest on it, they still want their money back, right? And so if you are taking out tons of lines of credit, so if you're just applying for a credit card or auto loan, and then you apply for a personal loan, and then you went to a cash advance place, and then you took out 2 credit cards, and then you took out another personal loan, or try to, right? Then you try to take out another personal loan, and then you apply for a mortgage, and all these things within a certain time period, 2 years or less, that looks very sketchy, right? That looks like, okay, sis, you're doing a lot. Like, where's your income? Why can't you cash flow a lot of this? Again, that's why we have an abundance account, an overflow account of savings, to where we can cash flow a lot of these things, especially auto loans. That's just a terrible, terrible product and scenario. And you don't want to look like you are trying to, get credit, get lines of credit to live off of. You want to look like you are using lines of credit as a financial tool, which is exactly what it's for. All right. So within 2-year period, you're going to look at your credit report. Within the last 2 years, you need to make sure that you have 2 or less hard inquiries. Again, hard inquiries means you apply for a credit card, you apply for some type of loan, you apply for apartment or a house or a mortgage. Those are hard inquiries, and you want less than 2. If you have more than 2, good old Brandon Weaver, that's my boy. I've been following him for years, and using his method, I've helped a lot of clients and individuals clean up their credit. He shows you how to dispute and remove those hard inquiries off your credit report. So again, I'm going to send you over to that YouTube channel, Brandon Weaver, and create some letters and create some documents to where you send into those companies and have them remove the hard inquiries. And also you're going to send letters to the credit bureaus to have them move the hard inquiries to where you clean up that area in your credit report. Again, this is key, because this is going to look like if you're depending on credit or if you're leveraging credit. And again, we're all about the benefits of having a great credit score and a cleaned up credit report, right? All right, so definitely do that. Now, soft inquiries are inquiries that do not affect your credit score, but they kind of show up, right? So a soft inquiry could be if you already have a credit card or store card and they want to extend a higher line of credit to you. They may check in with your credit score and say, hey, how's she been doing over the last year? Oh, she's been doing good. She's been keeping up her payments on our stuff and on other people. We might increase her credit score or her line of credit. But it will show up on the credit report as a soft inquiry. This does not affect your credit score. It looks kind of ugly. It looks kind of all over the place and messy when you have a bunch of soft inquiries listed under your credit report. But it doesn't hurt your credit score. And I mean, creditors and businesses and other people that you're doing business with while you're trying to open up your line of credit, mortgage companies, they can tell what's a hard inquiry and what's a soft inquiry, what's like routine that you didn't necessarily do and what somebody else did on your behalf. So I wouldn't put too much into it. But if you have a ton of them, I probably would write a letter or call the company and say, hey, can you just report to the credit bureaus that, you no longer want this on my credit report. You're not reporting this anymore, and just see if they'll take it off, right? Like it doesn't hurt to ask to clean up that area, because at the end of the day, we want a pretty and cleaned up and decluttered financial report. Because again, going back to what I said before, the advantages of a high or of a cleaned up credit report is not only a high credit score, because that goes hand in hand. The better your credit report looks, which is what's based on your credit score is based on. So if you have a great credit report, you're going to have a great credit score, right? But also, there are entities and companies, businesses, employers, insurance agencies, mortgage agencies that look at your credit report aside from your credit score and will decide on whether or not they're going to lend you a line of credit, a business line of credit, a mortgage loan, whatever, right? Your credit score could be great, but if you have some things that are red flags as your credit score on your credit report, that could be the deciding factor for you not getting what it is that you're trying to get, all right? And so that is exactly what I do not want for you. So take some time this week or this weekend, pull all 3 credit reports from Experian, Equifax, and TransUnion. You can go to www.annualcreditreport.com to get it for free every year. And you can get all 3, download them, look at them in all of the sections that I told you to look at, highlight what you need to dispute, what you need to send letters for, what you need to call companies and beg for forgiveness, I say, or send Goodwill letters to get some of this stuff off your credit score, off your credit report, to make sure that you can leverage your lines of credit, leverage your name, leverage your credit in the future. All right. So that is day number 2 of the Financial Spring Cleaning Series, cleaning up your credit report. If you have any comments, questions, or concerns, drop them in the comments. If you are on my podcast, email me at info@yourprettypennies, and I will talk to you soon. Bye.